All right, welcome back, everyone. Today we're going to be talking about something that you watch a lot of these videos, you may get sick of me talking about, but so important, and that is having a plan before you enter the trade. And the reason I'm doing this video, I mentioned this a lot, but maybe you don't know the components, you don't know how to approach it. So it's going to be a quick video breaking down the best way to create a trading plan. All right, welcome back, everyone. Be sure to like, share, subscribe, ring that bell to be notified as soon as we go live, drop a new video, publish a new podcast. So much on the channel. Take advantage of it. The best way, subscribe and ring that bell. And then, tell you, it's the wildest stock market in history. In my 15 years, we've seen nothing like the last year and a half. It just continues to get wilder and wilder and wilder. Share with your friends. I mean, I think that, especially as we look at the inflation, you know, there's so many things going against you when it comes to, you know, making enough money to have a great life, to provide something for your family. I mean, there's competition in the job market, there's inflation, there's so many of these things. What's great about the stock market is it's accessible to anyone. I mean, doesn't matter where you are in the world, doesn't matter what your age is, race, color, creed, sex, it does not matter. The stock market is available to everyone. And that's one of the greatest things I love about it is anyone can open a trading account. Anyone can get started. Share with your friends. Speaking of getting started, check out the StocksToTrade team. It's a mentorship program where I've devoted the last 5 years of my life doing 3,000 webinars. 3,000, okay? 2 a day, 3 a day some days. Every single trading day. Never called in sick, never missed a day unless I was like on an airplane. I mean, that basically, if you're a member of the StocksToTrade team, you know I don't miss unless I'm flying. I wouldn't want to be next to a guy giving a trading webinar on an airplane. Kind of rude. So anyway, check out the StocksToTrade team. Speaking of no days off, I'm doing YouTube videos when I'm sick. Anyway, that being said, we're going to talk about 3 steps to having a trade plan. And ultimately the number one is, how much money you're willing to risk. And this goes into the chart. So you'll hear me say over and over again, have a plan, have a risk, a goal, an entry. They're all based on key levels of the chart, but different stocks have different range. This is one thing that trips up a lot of people. Seems kind of simple to me, but I see where it does trip people up. Is they pick quite frequently too tight of stops on really volatile stocks because they don't have their position size calculated properly, okay? LGVN is today's kind of huge runner. Stock went from a low of, in the 2s and 3s all the way up to a high of 9 as of now. The day's a long way from over. So you got to be able, you can't be overly sized on these stocks. I mean, listen, if you got a small account, in my opinion, you should not have 1,000, 2,000 shares of LGVN. The nice thing about these stocks is even with a couple hundred shares, if you catch a $2, $3, I mean, that's a very solid day for a small account. Have realistic expectations. So calculate your max risk. And that number is a little different for everyone. But listen, I think that at the end of the day, you got to have a risk that is based on your account size, but is also a number that's not going to screw you up mentally, okay? And that's why it's such a personal question. And there's position size calculators out there, but this is another kind of psychology thing I don't think I hear people talk about that much, is even if, whatever that number is, say you got a $50,000 account. I mean, if you're losing $500 a trade, that is not crippling. But if $500 a trade on a stop loss, which you're going to get stopped, it's part of the game. If that screws you up, if that, maybe the producer will bleep this out, but if that pisses you off and puts you on tilt the rest of the day or the rest of the week, then that number is too big. Okay, you have to have a number that when you get stopped, you're like, okay, I lined up the factors. I used Tim's worksheets, in the trading courses. I stacked everything up. I took my shot and I took my loss, and that's trading. Okay? That's your number. Okay? And maybe you have a $500,000 account and $500 loss still pisses you off. You got to determine that number, then set it based on the chart, size your position properly based on that. Next thing to know is a risk to reward ratio. Okay? This is one of the big things that I preach and I preach and I preach is that 3-to-1 risk to reward ratio. And when we do that, so basically the idea behind that would be is, going back to LGVN as an example, say you were trading that high day break at 5, you were risking 450. Your stop, 50 cents a share. Let's go back to that $500 stop idea, okay? So in this scenario, if you've got that 50 cents of risk, that means you're going to be buying 1,000 shares so that if you do get stopped, that's your $500 loss. Let's assume you're good with that. You move on. Now what you have to do is decide, can I hit a goal of $1.50 of upside? That's again, that 3-to-1 risk to reward. Because if you're just risking 50 to make 50, you'll never get ahead because you're going to take losses. You're going to be in that one step forward, one step back idea. The reason we look for 3-to-1 is that way, even if you have a couple losers and then you have a winner, you're still ahead. So on a stock, again, like LVGN, you can see once it breaks 5, say that's your buy, you're risking 450. I mean, within seconds, this thing's at 7+. So yes, it's a real world example, but the kind of, when we're looking at these low floats with extreme range, you could reasonably say to yourself, this is the type of trade I could make and have a realistic 3-to-1 risk to reward. Now, maybe it spikes to 650, immediately slams back, and you sell at 6, which would be 2-to-1. At least it has the range, and you have a realistic goal in that range. Next thing is always, 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 and I will finish on this. You determine your stop and your goal before you enter, okay? And I know you're going to say that takes time, Tim. These stocks move fast. I don't care, okay? If you can't get to the point where you can write down or type or I prefer, especially as newer traders, I want you writing it down, typing it, because I want you looking at that trade plan. So that's a little tip there. Like back in my early days, I used to put it right on an index card, and I would put it in the function row of my keyboard so that plan was staring me in the face, so that when I started letting my stop slip, that index card was staring at me. But anyway, it doesn't take that long. Okay? I know it seems like a long time. But if you can't commit to that, then I think you're being bit by FOMO, and you're chasing, and you're getting all fired up, and you're probably going to lose, okay? Determine that risk, determine that goal, determine that entry based on a key level, and stick to the plan, stick to the plan, and stick to the plan. And then also, last thing, understand if you're not under the PDT, if you can trade freely, you can retrade these stocks too. So I know the PDT kind of screws stuff up, but if you're not under the PDT, understand. I mean, LGVN was a high day break this afternoon. It didn't break, yanked hard. It might do it again, okay? So you can, that's why I love these low float, highly volatile stocks. They spike, they re-spike, you can re-enter. And again, for the third time, if you're not under the PDT, these are the best stocks to retrade and get everything off your watch. Then, if you are under the PDT, take your one shot a day, you're learning, you're growing your account, but don't overtrade, okay? Because then what happens, you put yourself in a bad position, you get locked out of your account, and it just is what it is. So, all right, everyone. Goals, okay? Dollar stops, writing down your trades, entries, exits, goals, stops, based on the chart. These are all simple things that I almost said nobody does. These are all simple things that all losing traders don't do. They don't take the 30 seconds, the minute, the 2 minutes to do this work. Then they're the ones that say day trading doesn't work. Day trading is a scam. Nobody makes money day trading. because they don't put in the work. Don't be that guy or that gal. All right. Check out the Steady Trade team. Would love to teach you all this stuff. I mean, I know this is a 5-7 minute video. We go in depth every single day, drilling these things, and you won't be that person breaking your plan. You won't be that person FOMOing into trade if you join the Steady Trade team. Have a great day. We'll see you next time.